Yo, how you doing? It's Saturday, day after Good Friday. Markets were closed Friday, and I said, what was it, Thursday, Wednesday, something like that. I'm tired of making mistakes, and as a result, we're gonna go to my channel page, and we're gonna look at some stuff because I'm tired of making mistakes. I'm tired of losing $800, $1,400 in a single day. I don't like it. I'm tired of it. I'd rather make money. Today we are looking at all those videos and essentially roasting me the entire time. I'm trying to figure out exactly my mistakes, where I made them, how I made them, and what I think I could do to fix it. And then at the same time laughing at me because, man, did I make two big mistakes because I just lost all what we gained Monday. With that being said, let's get into the video. Put on our handy dandy things right here. Off the get go, super groggy. Monday was the start of 3 days. Like, head to pillow, wide awake. I don't know what I did to do that. I don't know why I could not get sleep. I'm guessing something was wrong with me. I don't know. Meh. Um, I will exhaust myself this weekend. So that way I'm wide awake Monday. Why did I continue higher? Can you tell I'm not a morning person? I don't do mornings. The two things I found when trying to day trade, specifically for New York Stock Exchange, because I'm trying to stick as close to the material as I can when I'm learning trading, right? Something I've had to learn the hard way. I've tried staying up all night, being wide awake, going for this time, and getting the best trade possible. I've tried that. I've tried staying awake all night and going for this while awake. Problem number one, I get tired around 6 a.m. That's if I've been awake all day and all night. That's if I'm awake late evening into midnight. I get tired around 6 a.m. I cannot do it. Mentally, physically, capably, I'm just too tired. So I swapped the schedule. You saw that 2 or 3 weeks ago, right? I flipped my schedule completely. I now go to sleep at 6 p.m. and I wake up at 6 a.m., 7 a.m., 8 a.m., somewhere around that. This day, if I'm not mistaken, I woke up at 7:30 a.m. That was pretty late for me on this schedule specific. From this, I gather that I am not a morning person, but because I'm now waking up early in the morning, which is something all people in America have had to get used to due to school systems and the way they like to do things, right? It felt more natural to me to wake up into this. And I have been making better trades, more reasonably honest, and remembering the trades I take throughout the process of waking up early in the morning. The better of the two is wake up early in the morning and trade. Because I can't do it midday. My opportunity's done and passed if that's the case. If I do it midday. So, I thought about it the other way around too. What about the pair I'm trading? What about the thing I'm buying into, which right now is the S&P 500? What about changing that? Well, I have two reasons. The first is textbook. Typically, when I learn something, not when I'm teaching something, not when I'm trying to learn something, but when I learn something, I know for a fact I have it from that point on. I do best when the material taught is in front of me and being said at the same time. I'm being taught from the S&P 500. I'm being taught from many different examples. I am told that, yes, I could go to a different pair and do the exact same thing. But it is not the S&P 500 that I'm trading when I change this pair. And as a result, the ground results, bottom line results, the end results are going to be different. So, I'm not looking, and this is, again, part of me learning. When I'm after a result, I'm not looking for worse. I'm not looking for better. I'm looking for a consistent, steady incline from that result onward. I understand losing is a thing of trading. I understand that part. My results matter more to me than the losses. Though the losses I can take lessons from. Hi, we're doing that now, right? That being said, I'm aware and understand that when I take a trade, my end result should be the idea being correct. And I understand that my exit strategy and entrance strategy needs to get better. My method is good. The trigger entry and the trigger exits are what I'm looking for, what I need to get a hold of, what I need to get ready for. Because that is what's ultimately going to keep me in the green and not back out into the red. Some advice I straight up ignored throughout the rest of my week. Let's break this down. Did I do all this correct? Yes. 24 and 8. Whew. Sorry. Mark the highs and lows of each level. I felt high on the London, passes a high on the Asian. Delete the Asian because there is a new high. Resulting gist are key levels here and here, right? From this, what should I be looking for? Well, the past I've been breaking down the building blocks as I see them on this chart, right? And determining the best trade possible from not only the building blocks on this hourly chart, but from also the daily. Because I recognized from last week that the daily bias said we're still in a downtrend. We're in a retrace. When I took a trade against the trend, it resulted in a loss because we were in a retrace. I was expecting price to go much lower. In reality, it didn't. It went higher. And because it went higher, we got stopped out. I'm pretty sure this was one of those days we actually successfully took this trade. We took a long time on this trade too, and it was on an FOMC day. That was, as per the title, a bad idea. Very bad. FOMC is a never trade day. Don't do it. It's not worth it because you will more than likely lose money. Which I find funny because I was able to take a trade off of this successfully. And I understand the wrongness of what I'm saying now. I should have been not on the market. I shouldn't have been on this chart at all. I don't think it's until later in the video that I actually check news. From here on, I think that will be the first thing I do. Check news. From that, throw all this up. And then after that, identify stuff left, right, and center. Outside of the sessions, highs and lows, this right here is also what is a massive change in market that from actually learning, right? I don't know how to get rid of that. From what I've researched and learned and done, you can't. This right here is essentially the market and the app I'm using having a miscommunication, and as a result, there is an error. And instead of filling in this spot correctly, we have this line here being the last known data the app received from this pair, from the market, from the broker, or not the broker, but the from the people who do this. We can actually see that now. Let me think about that. Let's go ahead and boom, queue up trading view right quick. I'm gonna swap views so you guys can actually see this, because yeah. This. Hello. You should be able to see. Yep. Good. Okay. So this is essentially what we did. We're looking for Monday, which would have been this right here. Yep. That line is still there. Has not changed, does not change, will not change. I don't understand why this is a thing. And I don't know exactly how to change that. I can go to settings, right? That's the symbol. Color bars, adjust for contract changes. I don't know if this actually does anything. This is literally cosmetic stuff. Yeah. If y'all see anything in these settings I could change to fix this little gap thing right here, let me know. I'm 100% willing to attempt it. I'm not going to change the setting I know nothing about, though. I don't know what to do here. So I'm going to cancel that. But as you can see, we had a breakage here, breakage there. We took 2 trades here. I believe we made a mistake. We did, in fact, make a mistake on that day. This is Sunday. That's Monday. Yep. We made a mistake here. So we're going to continue watching that video now and get a firmly grasp all of it to get the best info we can from it. Okay? Okay. Hold up. Hot dog. Hot dog. Hot dog. I have a fair value gap here. No, I don't. This inverted that fair value gap. Yep. This is an inverse fair value gap, not a valid fair value gap. What I do have is a fair value gap right here. It's a very small one. That was respected, and so price went higher. I believe I noticed that later on in the video. Could be wrong. What we do have is an order block here, liquidity sweep there on this one here. And as a result, we should be seeing price move lower for this sweep, if I had to guess. If like my building blocks are correct, right? Because fair value gaps are signs of continuation. That price is going to move higher. Okay. At the tops of our highs, up, down, boom, market makers had the opportunity to sweep the liquidity and fill their sell orders with the resting buy orders above here, forcing price back down into their direction. I know this, and so I'm cautious of this because that is a sign of reversal. That makes the most sense to me. I don't think I can count this as a liquidity sweep. Why? Because we arched here. Technically, this right here is the high. This right here is a high. Don't mistake me now. But per this move, this is the current high. And as a result of these two closing below this high, this sweepage, I don't think matters. I don't know if that matters or not. I'm an amateur trader trying to learn. If you got an answer for me, let me know. I'm all for it. Here you go. No, it's not. I've still got that marked as a fair value gap, and it's wrong. From this angle, from here this way, yes, it looks like a valid fair value gap because there's nothing in this saying it is. But the fact of the matter is, because this candle closed up above a fair value gap that was listed over here, right? This is inverse fair value gap, showing price is going to continue higher, not lower. Because remember, fair value gaps in the direction say continuation in that direction. If it's inverted, price is going the other way. No, no, no. Ooh. Nothing over there. This is me messing with stuff in the app. This was an idea of mine. I remember doing this. So when I saw this gap, I tried fixing it myself by literally just drawing over it, placing all of this down low, right? And acting as though this right here was down here, right? Because it made sense to me that a closing candle should start at the top of the previous green candle. That makes the most sense. So take that block, draw over it, and then make sure we get the wick in there so we understand what's happening here. This fair value gap was inverted, right? From that, we went up here, discovered we have a fair value gap up here that was currently being respected. Price was supposed to go lower, but because this right here formed, the fair value gap up here formed, right? And it actually went higher. We should have seen price continuing to move much higher. That makes most sense to me. I think I was mad confused. Better off saying I was confused because of this. That gap did nothing to help me determine the building blocks I needed in order to find my entrance, right? This right here did not help me at all. It made things a little bit more confusing for me, just a little bit. So when we saw this and I wanted to move it down, that's what I did. I moved it down, showing an inverse fair value gap here. Well, this should have been considered a fair value gap to begin with. That's what it should have been. From this fair value gap, we had an inverse fair value gap because it closed above that. Because it closed above it, price continued higher. I think I'm wrong when I say because this right here closed above it, because we can see it clearly. This is the fair value gap right here. From this wick right there down all the way to this wick. This inverted this. And as a result, we saw fair value gap here, which says price is going to move higher. It's supposed to move higher, but because this is such a larger fair value gap, and this did not close above this, it actually wound up falling. We'll see that here in a second. Okay, this was after I entered. Let's see the build up to this. It was respected. It was respected. I don't know if y'all saw that or not, but I guess I drew it wrong the first time. So I can get that back into frame. There you go. That right there. There. You saw it there briefly. Come on. That. It was respected. Meaning this fair value gap right here that I thought was a thing. Yeah. One, this was the inverse, showing the price going higher. Two, this was the attempt at reversing this fair value gap here. Double inverse, right? Which was wrong, first off. This is a valid fair value gap. Why? Because it respected this one. The continuation of this price showing price moving higher, that was valid. This right here, respecting this fair value gap, that's also valid, moving higher. That's a sign of continuation. A respected fair value gap is a sign of continuation. An inverted fair value gap says price is going to go lower on this uptrend specifically. From here are our key levels per London session specifically. We have a fair value gap here I believe this is the 5 minute. Yep, that is in fact the 5 minute. We have fair value gap here that was inverted on this candle here. We produced a fair value gap from this one showing price is actually going lower. Price comes up. I don't think it inverts this, and it continues lower. We have ourselves, again, the same order block here. This order block that caused the liquidity sweep up here per the high time frame confluence over here, right? When we had that liquidity sweep, we would have been looking for a break of structure on the 5 minute or the inverse fair value gap. We got the break of structure and the inverse fair value gap on the 5 minute here. I believe that's what I was talking about here, right? From that, we would be looking for a 5 minute continuation, fair value gap, breaker block, order block. Still getting used to the valid fair value gap aspect of things. Because, per this move here, right? If this respects this wick and does not go close above it, okay, that means price is going to continue lower, which means this is a valid fair value gap to look at. If it inverts it, price is going higher because, one, clearly it's not going lower. Price wants to move in a higher direction. We are in an uptrend. We are in a very distinct uptrend, even on the 5 minute. We have a break block and an order block. Order block was confirmed here. We got the liquidity sweep from that. That order block was what had confirmed that. I think what we were looking for, when we're looking for these signs of continuation specifically, we're looking for fair value gaps in the same direction. Like, all of these should be in the exact same direction, right? This would have been considered our order block if this shot higher, swept this liquidity, and from that it barreled on down, right? I think the breaker block in this case would be not the sweep, not this leg up, but this right here that caused our order block to form, sweeping the liquidity on the downside, which it looks like almost it wanted to. Down, up, low here, down, up, low here. It wanted to sweep that. So this would have been our breaker block. This right here, this green candle up. I thought these two down would, but it's before an order block that a breaker block forms. Shows weakness of the buy side in a green fashion and a sell in the red. So we had a weakness in the buy side, and as a result, we had breaker block there. From that, we got our fair value gap and break of structure on the 5 minute. From there, we would have been going down to the 1 minute looking for a break of structure and inverse fair value gap. I think we entered this trade off of a fair value gap, inverse fair value gap here. I think we did, if I'm not mistaken. Let's see what we did. If at any point this video, me trying to correct myself, my past self here, gets something wrong and still winds up like making sense of things, could you do me a favor and correct me? Like, I'm beginning to slowly realize this is a method on entering and exiting a market. I understand it's not set in stone. Don't take it for iron word, because guess what? Things could change in an instant and you now have to reorder your entire strategy. I'm beginning to wake up to that realization, and I'm working on it as time goes. I am actively learning it. I'm actively figuring it out. Let's continue watching. That's something I need to figure out. How much lower is it supposed to be going down? Because if it only goes down, like, we want it to hit take profits. Cool. That's fine. My question is, how do we know when it's going to stop? Do we look at the same confluences and go, yep, this isn't good, leave? Or do we wait for the take profits to get hit, potentially lose on the final take profit, and get stopped out from market coming back up? Because I've already tried learning partial entry and partial exits, right? Partial entry is the goal. That is the one thing I'm after. But partial exits, those don't make sense to me. They're a little bit harder, and per the market I'm wanting to trade when I get into this with my actual money past the paper trading part, I will not have the opportunity to partially close. When I enter, it'll be a partial entrance. When I close, it'll be a complete close of the position. I will either have money in my pocket that I have gained, or I will have lost money from that trade. Plain and simple. That's essentially the way I'm treating it now. I either am in it and taking profit from it, or I'm losing my money from it. I just realized I'm probably like halfway in the square. Sorry. This is me reconfirming because not the week end, but I believe the Friday, right? It was news day. We couldn't trade. So what I did was I used that time to write down all the notes needed for breaker blocks, inverse fair value gaps, and SMTs. I noted that SMTs were not to be used on Forex, and that inverse fair value gaps and breaker blocks are, in fact, confluences we can use within the market. I have since said I'm staying away from SMTs because they can lead to false results. And I understand that could be said for every building block within the market. I am after what I can easily understand and what is going to make me profitable in the end. Yes, the SMTs can be a precursor. Per the mentor I'm learning under, I'd like to see this without SMTs in the play. And that's just me on a preference scale. That's literally just me. Order blocks and breaker blocks can be found in the same price range. They're typically found in the same price range, which means from here to literally here, this could be considered an order block. Why? Because we swept liquidity on a high time frame via this. This could be a breaker block because it closed below this and is found typically within the same price range. However, I'm also looking at this leg down here. Consistent red the whole way, right? Order blocks are the legs that cause liquidity sweeps. This did not sweep liquidity. This did not cause a sweep in liquidity. Instead, maybe, I don't know, because we had fair value gap there, and it closed below it. Closed below both, making it inversed, right? I'm not entirely sure if an inverse of fair value gap can be considered a liquidity sweep as well. I'm used to identifying them by the wicks clearing of previous highs or these wicks clearing previous lows. And from that, using the building blocks to determine the best entry, right? I'm going to stick with that, I think, for liquidity sweeps for now, which means none of this swept liquidity except this wick here, which means because of this sweeping liquidity, we had order block there, right? The leg down caused this sweep here. And as a result of seeing this order block, I'm tempted to say I need to change that retrospect because breaker blocks are disrespected when price goes above it, right? Hi. Isn't it going? See? If he's going, I'll go. If not, I'm staying. I might have to pause this video and be right back. I'm going to pause this video. I'll be right back. Sorry for that brief pause. Decisions being made and all. Boom. This is me, like, so, oh, hello. So it wasn't the inverse Fourier gap that we entered off of, it was the break of structure. We made a new high off of this here. Entered on a sell position, if I'm not mistaken. Watched it fall. Oof. Something I also wanted to note here, I made the decision to start using TradeLocker because it is the broker I'm going to be using, right? The broker I'm using is the one that supplied TradeLocker to me. As a result, I'm taking a trade on TradingView and TradeLocker. TradingView is for chart work and learning the paper trading aspect of stuff, and then TradeLocker is for my actual investment stuff. I'm not actually investing yet. I am investing with paper trading, right? That is me learning how to trade. I am not going to be using my own money until one, I am successful for 3 months, which is already looking like it's going to be a challenge. And from that, some harsh decisions on my part are probably going to get made, and as a result, the videos you see on Orb Plus might not be around for very much longer, and for the time of day I will be working, it's going to be one of those. I'm going to be back to my old routine of uploading solely to Orb's Vault and Orb, the gaming Orb on YouTube. Uh, just because I will have no time between sleeping and working. That's just how I operate. So, let's continue watching this, get as much as we can from it. This is make it or break it for me. So. that placement. We bought in. This is a buy position. This is how we made, I think it was $400, right? We knew that price was not going to continue. We knew price was going to continue lower because it didn't touch our take profit down low, right? Or not take profit, but our key level. It has yet to, right? This was a dumb decision on my part, but at the same time, it's also what made me money on this trade. We knew it didn't hit that take profit or the key level. So what I did was I used every confluence I had up to the point, right? We knew every single one right down to this, the 1 minute, where we had inverse fair value gap here, right? We had a slight, like, we keep having these weird candles between overlapping closures and opens on the reds, and then just straight up gaps. This whole leg down being so wonky is the only word I could use. It's so hard for me to describe. Like, the frustration of me trying to figure out where to enter off of a market that wants to do, off a chart that wants to do this. Very annoying. So we took it into our hands, our own hands, Monday, to figure out that we are going to buy here, go higher, sell at that high position, and then from there, find the entry point on the down, on the back down, to get that entry again, and then close on a low side. I didn't put it at the top of the fair value gap. This right here, this wick is like right up against that. We do have a fair value gap right there. That has been respected. It was not closed below.
think I made a mistake. When I went to take a trade from TradingView, like what I'm doing right now, I'm looking at the chart and going. I'm also looking at the app, TradeLocker, right? TradeLocker has 10 minutes ahead of TradingView's data. So I can see effectively 10 candles in front of what I'm seeing now. Okay? From that, I'm essentially using TradeLocker, to see what TradingView is going to do, so I can get the better trade on TradingView. There's a problem with that. I have a problem with that. There is a valid problem with that. I'm not taking my trades on TradingView. Paper trading, sure. TradeLocker is where I'm at. I have to use TradeLocker. That is my brokerage's way of trading. I cannot use TradingView except for chart work, except as chart work. So in compound with using TradingView to take trades, I'm also using TradeLocker. I'm also putting chart work on TradeLocker. I'm using all the confluences on TradeLocker as well. I made a mistake in this video, and I think I made a mistake the other 2 times this week that I've taken a trade. They're primarily me looking at TradeLocker thinking, oh yes, I'm going to get a better trade on TradingView. This is good. I can use it as kind of a confluence. Though they might be the same chart, I'm not going to be making real life money off of TradingView. I'll be making it off of TradeLocker. I think I need to get out of that habit of using TradeLocker to see where TradingView is going to go. That is a bad idea on my part. I should not be doing that. Especially seeing as when I enter a trade on TradingView, it's the candle on TradeLocker it's entering on, not what's visible on TradingView. And what's worse is because when you exit, right, it exits on the candle that's visible. So if I were in a trade right now, which I am, and I were to exit on this candle right here, it would display an arrow on this candle. I'm sorry. It'll display a candle arrow on this one, but in actuality, because this right here is what's visible, it's going to take the profit from this candle, not what I would have lost or gained from this candle over here. Make sense? It's because of this delay that TradingView has. It's because of the delay in data package or whatever. I don't really know the exact terminology. I do know that this is an app that you have to pay a membership for. This is like, this part of it is free. To do chart work is free, but to get all of the advantages that comes with this app, you would need to pay a subscription fee in order to even get where you wanted to with this. And I understand they need to run their ads, they need to pay a certain fee, and they can stay afloat. I get that part. I just can't pay any fees right now. I can't do this. I can't have that there. So I'm using TradeLocker to not circumvent, but actually trade with reliable data that is coming to me when it's released, and not 10 minutes after. I do need to fix that though. I need to figure out how not to use TradeLocker to use TradingView. I love that thing I do. When I think I doubt myself on something, right? So, for instance, fair value gap here was inverted. My thought process is if this inverts this, then this right here is not something I can take into confluence. I can take into account. I can use as a building block. It's just not. But the thing is, history repeats itself. This inverted something. Otherwise, it wouldn't have been the leg down that it was. This disrespected a fair value gap. It was supposed to go lower. Per the 1 minute, though, because price changes rapidly, more volatilely on the 1 minute, and we can see it more accurately. We saw that this disrespected this. My thought process when this right here inverts this fair value gap, we can no longer use this as a confluence. It's not a fair value gap, it's an inverse fair value gap, right? That's wrong. That's wrong of me to do. That's wrong of, I think, new traders to do. I think the conversation I had in my head with TJ Art was, hey, question for you. And I know it's elementary. I don't mean to make you mad or anything. I'm trying to learn this the best way I know how, right? On the 1 minute specifically, right? When you see a fair value gap form, right? When you see that fair value gap form, and then it gets inverted, do you use the fair value gap that inverted the previous one as the current fair value gap confluence? Because it is confusing to me. You say on the 5 minute, look for an inverse fair value gap, right? You're looking for one of these to form. And then from there, you go to the 5 minute and look for a separate fair value gap to form, right? That's typically after a break of structure. That's typically after an inverse fair value gap. So, and then on the 1 minute, you say to do the exact opposite again. Find the inverse fair value gap. Boom. So my question is, because you're looking at the 5 minute for a fair value gap, are you using the inverse, right? Clearly you're using the inverse because that's what you're saying here, right? Inverse fair value gap. Woo, we found it. Go to the 5 minute, find a fair value gap. On the 5 minute, would that not be considered a fair value gap? In my head, the answer was no shit. That's a fair value gap. Nada. That's the whole point behind that. It closes above it. There's a gap there. That's a fair value gap. Use it as a fair value gap on the 5 minute. Then I get to asking this question. The 1 minute. If that's to be treated as a fair value gap on the 1 minute, then would that be the break of structure immediately after? That makes the most sense to me. You had lows here, you had a lower low here. It wasn't until it got inverted, and guess what? Boom, we had break of structure in the 1 minute. Which means I could have entered right off of this and watched price go higher. That makes the most sense to me. It does. Does it make sense? The only other two questions I have when identifying all these confluences are with breaker blocks and order blocks and their relationship to each other, with each other, and around each other. Are they as close as this fair value gap can be? Are they as close as these two candles right here could be? Are they as close as these four candles as a group? We had a breaker block here showing resistance or weakness in the sell side. Order block, boom, sweep, push higher. Does that make sense? Every time I think I'm asking TJR this question, I hear him in my ear on that, I believe it was his second video. Was it his second video? I can't remember which video it was. The one where he was screaming at the top of his lungs. Like, it was tame up to that point, and he, in a sense, revealed his biggest flaw when creating chart work and screamed at us, at me, for making a dumb Timmy move. Okay? Every single time I ask a question, I hear the screaming. I'm going, okay, so what's the solution? What am I trying to figure out here? What's going on here? How's this working? How is this relevant? Can I use this? Is this a valid thing to use? It's on the chart. Clearly it must be. Do I make sense? I think I make sense with that. Also, this whole thing, throughout this entire ordeal, this entire gist right here, I could hear him screaming at me because we didn't hit our key level. We took a chance, a risk with this leg up, and it wasn't until right here that we actually entered. We were looking at an entrance this entire time. We missed this, I think. We entered here because we weren't confident in this. I was not confident in this, and as a result, we waited till there for a valid break of structure. And that was stupid because this right here was the break of structure. Took a trade there. We had fun with it. Boom. I think we left this trade because we realized it wasn't going to hit this. This is also stupid to me. The fact that you pull up the filled, all cancel, and you have to sift through this to find your most recent entrance and exit. This is annoying. I now know it's the placing time I should be looking at for the entrances and the exits, because that's when you activate stuff and get it the way you're supposed to. Both of these, actually. Both of these are important. From here, we touched our key level. We exited. I do that very often, don't I? In either case, we hit our key level this time. From here, we're actually looking for our building blocks. What are our building blocks? Exactly. First, key level hit. Boom. Next 5 minute, we go from the 1 hour to the 5 minute, and this is essentially what we're looking at now. It's the 5 minute. We're looking for a break of structure or an inverse for value gap to form. Right? Hope you enjoyed the scream. Anyway, we have fair value gap here. That's what we're waiting on to come below and close below. This right there. I completely agree with myself here. On the higher time frame, we have not hit our key level. But on the 5 minute, we have. We have now. not fun at all. I want to get rid of that gap. Even on trade locker, that gap's present, so it's not just trading view on that part. I know it's not. On the 1 hour looking at this, we are above everything right now. I am reconfirming all of my confluences, going through every single time frame to get the best result from it. Did I enter? No, that was the first trade. That says price is going to go lower. We almost had a inverse for value gap off of that candle there. This right here is our indication that it is going to continue on down. We got an inverse for value gap right there. Could have entered off of that. What was my reasoning? We didn't hit that level. Okay, from here, we're going to take this. We held on to that trade for a long time. We saw it come up here. It was gold. We were actually playing a game. We're trying to keep our mind off of this. I was, because this whole dancing around the levels here, nerve-wracking just to look at. I was confident too. I could say that identifying every single building block up until where we needed to. I think it was off of this right here. No, it was this right here. Because the inverse value gap on that. I'm confused. That's why. We close. So we hit take profits 1, 2, and 3. I think we closed like in this. You can't see any arrows because it was like way over here, but we waited for it to come back up. I believe it went all the way up to here, back down, and we closed in this. This was a successful trade that we had to wait hours for. And believe, if I'm not mistaken, I waited 3.5 to maybe 4 hours for this to come all the way down. And from there, yeah, we got it at 54.24. And that's like in this, so it would have been like right in there ish. Maybe like right up in here. It may have been up here that we exited. But I'm about to go into a spiel that will pretty much identify exactly what I did, how I felt about it, and essentially what I think my mistakes were during this video. I know that the building blocks I used were under the pretense of what I said before about the question I had over the fair value gaps and the inverse fair value gaps. If from the inverse I can use the presented fair value gap from that, identify that breaker block within and the order block for the sweep, and then from that continue, right? It's under the pretense that that question had not been answered yet. So I was confused, and as a result, we took a trade much later into the game compared to before. As a result, we got not stopped out, but not as much as we could have as a result of this trade. So, yeah. Made a profit. I want to put this in retrospect too. Friday, we lost $8,000. That hurt. That hurt a lot. I did not want to lose $8,000. I'm not going to lie either. Monday, relief was there. I had relief Monday because we started the week strong. The previous week, it wasn't good to trade. There were too many red folders. I thought I could trade during them. Bad idea. Accompanied by the check news don't trade on CPI, PPI, FOMC, and FP. I'm thinking my limit is 2 red folders. 2 red folders is a hot, sweaty no-go. Don't even try to trade on 2 red folders. Not even worth it. From that, essentially, any other time of day works. Be mindful of the times for CPI, PPI, FOMC, FFP. From there, essentially, like look at the time and set your stop, set your good to go time, set your stop time reasonably before that news hits, because you know price is going to do whatever it wants to when it does. Stay away from that. Yeah. Let's see. There you go. That was the successful day of the week. We couldn't trade that day. We lost $800 this day. What did it look like? What was the weather? This was the first day this week that I had no sleep. Absolutely none. It was awful. I woke up from being awake. I don't understand why. I just did. It sucked. Let's go to where I see news first, because clearly I set up beforehand. Let's go ahead and just see. There was nothing this day. This should have been a profitable day. We had one orange folder, Empire State Manufacturing Index, GBP, Euro. This should have been fine. We should have had a good day today. That day. I believe this is Tuesday. Tuesdays suck. Just because Tuesdays. That's my personal opinion. Tuesdays, I don't like Tuesdays. This right here should have been a profitable day. It wasn't. Yeah, you could see just me trying to wake up from not sleep. Bad decision. Very bad. Bad, bad. Bad, 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 bad. Bad. Not good. This was Monday's trades. These were the successful ones. We're looking over the span of several weeks here. This is Monday, Monday, Monday. This was the week before, week after. This is about a month's worth of trading right here. Bad decision to make decisions based off of this. These are hours. So 2 weeks. Monday, Friday, because we had Sunday and Saturday in between this. And then that right there. I could tell I'm in my own head right now because this right here, like me saying all of what I just said, was because of a video I saw identifying. Oh, what is it called? It was one of TJR's videos that said, "Are we going to put our stop loss or take profit way up here?" And he essentially goes into a spiel. No, price isn't going to move 2 whole points or 2% or whatever percent it was in a single day. Set the expectation of take profit at a realistic level so that way you're not stopped out because you wanted more. That is smart. And that is what I tried to do here. I thought what my take profits were realistic. I knew these two weren't. I knew the stupid high ones up there weren't. So I stayed within this range here. I respected that price was probably going to stay within this range because why? It's consolidating. There were no highs or lows outside of this stuff right here prior to this movement. And it's consolidating. Like, this was awful price action to be doing anything with. It was not fun. What I was hoping for was a breakout of this consolidation, either up or down, one of the two. My dumb mistake was thinking it was going to be a strong reaction off of it. I thought it was going to go one way or the other instead of it continuing to consolidate. I now know not to expect price to break out just because I wanted to. From this, I also had one of those moments where I had a question in my head that I asked TJR. In my head, I said, hey, so I have marked my key levels for the session, as well as the previous high and low for, guess what, outside of the sessions, right? I know this right here should not have been counted. This was on the 5 minute, I believe I marked this. I knew this right here was a high, this right here was a low. From these two, these two, these two. I know that my range is in that, right? My question, though, was, so price is on the decline back down. I should be looking for my price for my key level on the downside to get hit, and for the reaction back up to be what I take profit from. My question would have been, is that correct to assume? Is that correct to go with? And I hear it again. I hear it right now, him screaming at me. Yes, under the confluences in the strategy plan. Assuming you have marked your key levels, and in your current session key levels, one is hit, assume the reaction, because our key level could be a liquidity sweep on the hour. Okay? I made one mistake. This was a fatal mistake. The first was, and the only one, was thinking that the key level will always be a liquidity sweep. It won't be. It could be a fair value gap. It could be a breaker block. It could be an inverse for value gap. It could be a liquidity sweep. It could be something. To identify that, though, is paramount. Tantamount. Tantamount's the wrong word. It's paramount to everything else. To identify the key level needed to be crossed. So your price action for the day is within your scope of reason. Screw bias. Look at the key levels first. Look at the bias, not because you want to know where price is going, up or down, generally speaking, on a higher time frame, because they hold the highest power. Are we in uptrend? Cool. Where's my key level at? Am I looking for a liquidity sweep? Am I looking for a fair value gap to get respected, disrespected, yada, yada, yada? Am I looking for an inverse fair value gap? A fair value gap that was formed before in a session, and I'm looking for it to get disrespected now in my session. 8, 9, 950. I'm looking for a key level. A key level, not just a liquidity sweep. This is me. At me now. In the future. Now. I'm taking all the words I'm saying right now for iron stone. That makes no sense. You get the point. Look for a key level first. Wait for it to get hit. Building blocks. From there on. Under the pretense. The confluence you determine is correct per the time frame. What do I mean that? How do I mean like that? Huh? That doesn't make any sense. Let's break it down right here. We have our key levels. Boom. I see a fair value gap in this. That right there is a fair value gap. Did it invert anything? Nope, because this right here inverted this one. Price is supposed to go higher. Okay. What about this right here? Do I see fair value gap within this? Yes, a small one. Was it respected up until this point? Yep. This was an inverse fair value gap, which means guess what? Price is going higher. Why? Because this was going down, this inverted it up. The general direction is up for the day. This should have been an up market. We should have been looking for an uptrend. We should have been looking for a buy entry. Per all these fair value gaps being inverted. We had inverse fair value gap, up, up, up. Everything screams up. What would have been my key level? 1, we would have been looking for this right here to be respected. Was it respected up to this point? Yes. Why? Because it wasn't closed below. Okay? It was respected. This is a valid fair value gap at the moment. Price says up. My key levels, the two I should have been paying attention to this round, would have been that fair value gap getting disrespected. So price coming down, closing below this potentially, and this at the same time. Because guess what? This filled the fair value gap. It respected it. If it had closed below, it would have been a disrespected fair value gap. Price would have continued down. How much further? Not much, because guess what? We have an overarching thing here saying, hey, we're going higher, not lower. So that's what I've been looking for. A respected fair value gap. And that's technically what we got right here off of this one candle. A respected fair value gap that was filled and priced immediately after continuing higher. Cool? That makes sense to me. What would I have been looking for had, instead of this being hit, this key level here being hit, this right here been hit? I'd have been looking for a liquidity sweep. And the only reason I would have considered a liquidity sweep is if we closed above this key value here, key level here. That part there. That would have been my sign of continuation. But wait, that doesn't make any sense. We're not in an uptrend. Yeah, we are. Higher high, higher low, higher high, higher low, higher high, higher low. Per this move, uptrend. This is on the hourly time frame. We're in an uptrend. We should have seen Prius price going higher. We should have seen the Prius fly up above this. What exactly could have changed this? What could have changed stuff? What could have changed it? Imbalances. What about imbalances? I'm pretty sure I went into this one too. This right here, this is a fair value gap that has not been disrespected yet. I think in this same video, I go into detail on, hey, this is a fair value gap. I think price is going to come down. Why? Because this right here says imbalance. This is liquidity. This is a draw on liquidity. This is somewhere. This is the absence of liquidity, sorry. And as a result, we need to fill that void before we continue higher. This, yes, says go higher. It's already gone higher, but we're also looking for this to get filled so we can continue higher, right? This fair value gap does not close. This, does it? Does it? Does it? Yes, it does. This inverts this fair value gap, saying it's going to go higher. We're also still working with the same gap we had Monday. Kind of annoying. Kinda. This right here will always and forever just... Ugh. Over here thinking I'm in TradingView. I'm not. I'm over here on YouTube. I think I've pretty much nailed the hit the nail on the head with the key level spiel. Look for the key level and stick with it, because chances are it'll probably lead me in the right direction. Probably. In the event the key level is not hit, assume price is going to continue in the other direction, in the direction it's going in, right? Because we'd have been looking for a respected fair value gap, price continuing higher. If it were disrespected, we'd have known price was going to go lower. That is the confluence, either higher or lower. It can only go one of two ways because it's already consolidating. We're looking for up or down right now. I failed to see it. I saw this fair value gap, but I didn't see this one. This was a fair value gap that was inverted, showing price was going to go higher. We should have expected price to go higher. And from this right here, it pretty much spelled it out either way, because that is a sign of continuation, that fair value gap going higher. Forgets I muted the mic first. Proceeds to go crazy with it. This is the hour time frame. We're looking at multiple days. Hour, 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 hour. My take profits should be on the 5 minute, not the hour. So I recognized two things. I recognized something that was interesting to me because we knew price was consolidating, but what I wanted to do was I wanted to see what would happen off of these two red lines. Yeah, I instantly forgot all about the red lines because I paused the video, came back, woke up a little bit, continued with the trade. That was a mistake on my part, aside from the key level mishap. But I noticed that this right here was respected. And then I also noticed that this right here was also respected. So what was I waiting on specifically? I was waiting on one of these red lines to get hit, more so than I was these white ones. Because the white ones indicate the price movement for that specific time period. But if either of these on the higher time frame were to get hit, that would have been my overall bias that yes, because this is invalidated, is going higher. Yes, because this is invalidated, is going to get lower. Right? Both of these fair value gaps were respected, and we were waiting for something to close above or below these red lines to help us find that entry point we were needing, right? We were wanting to get. If I'm not mistaken, in this same video, and we're going to see it here soon, I'm pretty sure we got both. And they were one was stupid close, the other was on point with crossing. It consolidated in a way that had price here and here, grazing past both, and I couldn't get that accurate read, and because it was within this time, it was bad of me to take that trade. And I'm pretty sure later on I discovered, oh, we weren't supposed to take a trade at all today because it didn't hit either. It kept consolidating. And as a result, we lost, I think, what was it, $800 on this. We lost almost $1,000, half of what we got the day before on this trade because I chose to be impatient. I believe, if I'm not mistaken, we took a trade off of it grazing past this on a sell. We took a short position. It went down. We had a profit. It came back up, almost stopped us out. I panicked, closed the position. It was after 10:30, and from that point, we couldn't take a trade again. That was my mistake. That was one of 3 mistakes, one of several mistakes I made in this video. I want to see where we entered. Actually, I need to stop using the NASDAQ. On the NASDAQ, this was disrespected. This top line, completely disrespected. And as a result, we should have seen price moving higher for the NASDAQ. The bottom hadn't been disrespected yet. So we had 2 key levels hit. We hit this one here first, and then we hit this one here second. Because we wanted to be extra safe. We wanted to be extra confident. I think this was an okay move on my part. That yes, this right here was our sign that one, inverse fair value gap on the most recent time. Ergo, price is going to continue lower. This was good because we knew at this point in time, price was going to hit this key level. From this key level, we should have gone through our identifications, which is essentially what I'm doing now. We're looking for our break of structure, inverse fair value gap from this candle forward. And I think I depict that pretty well when I go to actually do it. From this, it's just a matter of identifying the building blocks and going forward. I'm pretty sure I've said that in this video too. In this video we're watching here. What were my mistakes from this point forward? What were they? I'm gonna be real. Because Tuesday was that mentally taxing on me, I could hardly remember. If I had to guess, I'm going to say it's a combination of stressing because I'm looking at the chart and because of the overbearing presence of this red line. I blame the line. The line did it to me. The line did it. The line did it. Comment section. When I entered the trade, somewhere down here, somewhere up here, potentially looking for it to go lower, I more than likely saw these red lines as the no-no zone. The stop loss was well above this white line. That's what I did. These red lines scared me when price decided to move up past this. They were good markers. But in the end, they ultimately messed me up, I think. That and my own psychology, my own mental state throughout the trade. Man, am I quiet. I misidentified it. We were in a downtrend here. Lower low. Then we created, what was this? High here, higher high. This was the break of structure we were looking for on the 5-minute. From this 5-minute, we should have been able to identify the fair value gap. Boom. Down. And then from there, on the 1-minute, break of structure, inverse fair value gap. We had an inverse fair value gap here. We should have entered a sell position. Down. All this says down. Not mistaken. Did I say that? Am I? I think I'm wrong. Pretty sure. This is where things get a little bit confusing, right? Because we had an inverse fair value gap here. Per this red line, that was our indicator. Inverse fair value gap. That said down. It was an up candle that was inversed on this red. Because it was inversed, we knew price was going to go down, opposite, the sign of reversal. It's not going up, down is the direction. From here, key level got hit twice, 1, 2. We identified our building blocks. Break of structure. We failed to do that in this video. Our building blocks. I think that was another failure of mine. I failed identifying this break of structure here. I failed to identify not this fair value gap, but the result from the fair value gap because of the break of structure. We had our order block, sweep, or not sweep, but this would have been our breaker block. What am I high on? Imbalance and buy, ergo high here, boom, down. We had our break of structure. Fair value gap, inversed. From this inverse, should have been a sell down. Yeah. Let's see what happens. See what we did. Let's see what I did. Let's see what I did. My nephew. Hello, nephew. You see the baby? Do y'all see the baby there? That's awesome. He said hello. Hi, how you doing? Hello, nephew. How you doing? He's only after my phone. because I was distracted. But that was my mistake. Another mistake of mine was using them both at the same time. Sure. It may have been smarter, but it ultimately cost me. We had a break of structure, and I think what I did was I waited for the inverse for value gap before considering moving on to my second confluence, the continuation confluence. That price was going to go in that direction. The first 5-minute confluence is confirmation of a key level being hit and that it was valid in being hit, right? When our key level was hit, the red line, right? That was our first notion. Inverse for value gap. That was our first notion. The break of structure happened after. And then we waited on the 5-minute, the second 5-minute. We should have waited on the 5-minute for the break of structure we found here on that, right? From that break of structure, it would have been down to the 1-minute. We could have taken a trade, and we might have been profitable, even more so on this day, on Tuesday. We didn't wait, except for the first continuation a second time, the first confirmation a second time, the first building block a second time. Or in this case, it would have been 3 times because we had the inverse here, we had a break of structure here, and we were waiting for an inverse again for price to continue higher, not lower. There's where my idea flipped when the key level was hit, continue in that direction, not the other way. Unless it's a sweep on a higher time frame. And I think we actually confirmed in this video, it's not a sweep. This didn't sweep anything. So it should have continued lower. I think Buddy was having issues sleeping that day too. He wanted to play with you guys, with the mic specifically, but he was also kind of tired. So we waited for the fair value gap. I think I was considering this an order block because it extended up and we wanted to see the reaction come down. But on the Trade Locker app, right, it would have been 10 minutes ahead. So we would have had a candle on this line. We would have had a candle over here as well, right, separate from this. We'd have 2 candles ahead. We saw this move up and saw 2 red candles and thought, yes, price is going to continue down, sweep this, and move higher. I think that's what we thought because again we were working on Trade Locker and Trading View at the same time. This was the mistake I mentioned earlier about looking at Trade Locker to predict what Trading View was going to do, but we did it in such a way that we assumed on Trade Locker because of those two red candles we would have gotten the same result on Trading View. The charts were the exact same. There was no difference in them. It was just the delay in information per Trading View and the fact that the live information was again all over the place. It's live. It's supposed to be like that. And it had me not confused, but overwhelmed, dumbfounded. I think that's the correct word, dumbfounded. Because we saw those two candles and thought it was going to sweep. We thought this was a valid order block, sweep of liquidity, continue higher, right? But every confluence up to this point said down. Everything about this right here said down. We inverted this on the 5-minute. This would have been the retrace for the 1-minute we were looking at. And it would have continued further down. The storm was the loss in monies from this trade. There you go. There's the first red candle. I'm not tired. You're tired. No. It's like 2. It's 2 in the afternoon. I'm not tired. We moved to the 1-minute. Wonder why. We were waiting after entrance. We were waiting on the lower low to form to confirm that it was going to go lower. We didn't get that. It continued higher. The inverse fair value gap on the 1 minute was later than we wanted it to be. We entered early. So I want to make something perfectly clear. I made two mistakes here. The first was entering on TradeLocker. Why was that a mistake? Because I was using TradeLocker to predict what TradingView would do, which was wrong of me. Should never have done that. Secondly, when I entered on TradingView, it was about, 4 or 5 minutes after I had entered on TradeLocker. So this number right here is completely wrong for TradingView. I was already negative on TradeLocker when I entered on TradingView. That was probably the dumbest move of me. The mistake I made this trade was entering after looking at TradeLocker. That was my mistake. From this, I know better now. I know to look at TradeLocker as a single app with a single set of data, with a single set of preferences that I can use to enter a trade on TradeLocker, not TradingView. When I take a trade on TradingView, it is from the market on TradingView, nowhere else. Keep the two separate. I build the building blocks on TradingView first. I look at the app second, because chances are I'm going to see the result on both at the same time. From both, I can identify everything on TradingLocker first, take a trade, dependent if on all of this is met, and then after that, look at TradingView. Do the same thing. TradingView should be, in my eyes, in my opinion, and in my use, for chart work only. First. And second only, to actively taking a trade on, for the paper trading experience of it. Because I'm trying to master that psychology, right? I want to be able to know and do with what I have while I have it. So, with that being the case, those are set in stone now. Never ever use one for the other. Ever. And then never trade immediately after on one. That made no sense. To get the best trade, you get the point. De-risk. De-risk. That makes no sense. I know I'm laughing, thinking it's a joke. It's not funny at all. It's legit me just rambling at this point, because I should know better than to take a trade, wait 5 minutes, take another trade, and then lose on both. That was just actively stupid. Don't do that. That was a good stretch. I went higher and higher and higher. We got stopped out. because it went higher and higher and higher. It got stopped out. So what did I do wrong here? Because everything up to that point said price was going to go lower. Well, it did go lower. It went as low as this right here. Did we get stopped out? We're in the trade here. Let's see if we get stopped out. Stop loss. We actually got stopped out. Big ouch. From this, and this was let's take into account two things first, right? We entered a sell position. One, here, right? We entered on the formation of this candle, but TradeLocker had their data up there. See how big a difference that is, right? We entered off of what was presented to us here. And again, we entered on TradeLocker here, but we saw this here, right? We got stopped out on TradeLocker first. I believe that's what I'm looking at now. We got stopped out on this second, which is what I'm about to realize in this video. We got stopped out here as well. We had a feeling as it continued higher that it was going to get stopped out. We should have seen this. I should have seen this as the liquidity sweep it was. This being the order block, this being the sweep. And from there, building that building block all the way up. So, my takeaway from this video, from this one on Tuesday specifically, was when a key level is hit, watch what it does after. Watch what happens. Because if it is an order block and a liquidity sweep, liquidity sweeps are signs of reversal, that price is going to go in the opposite direction. Though the general trend says down, per the trend, current, if it looks as though it's going to be reversed, use it. Press buy first. And do what we did Monday. Instead of it just being a single trade on a small retrace up because the general trend is down, we need to be looking for that reversal first, taking a trade off of it. That'd be a long position. Buy, go up, boom. Wait for our second key level to get hit, the one above it, right? Or in this case, it'd be the take profit because we're in a long position at the moment. We'll wait for the take profit level to get hit. From that point, from it, we'd be looking specifically at a sell trade because we know that as price comes up, it's also going to come back down. We need to be aware of key levels being hit first. Wait 5, 6, 7 minutes after for that liquidity sweep move. If it's a sweep, assume it's going in the opposite direction. If it's not, leave it be. Continue on. And it'll present itself within 10 candles. On the 1 minute, it'll present itself in 2 or 3 candles on the 5 minute. A note for me in the future, from what it seems. A genuine note. And I believe we continue on, actually. I pause the video, I think, and what I do is I put a green line, if I'm not mistaken, a green line on this, and we watch price continue in that direction. Which means that this reversal here was so valid it continued, and we would have had potentially 3 take profits from this if we had gone on a long position. I think we instantly closed. I didn't do it. Okay, so maybe next video I did it. But we're going to take a look at this right here, right? In the next video we look at. And I want to see where price went after this red line was crossed right here. I believe those red lines were up. I didn't delete them until like after certain stuff. I want to see if it continued up. I'm pretty sure it did. I'm pretty sure we broke structure we did break structure here because it was a higher high at that point, and it continued higher from there. So let's go ahead and back out of this. Go back to channel page. If you want to find this channel, by the way, check out Orb Plus on YouTube. Literally right there in the name. Type in @Orb Plus. You'll find this symbol here, Orb Plus. Press on it. From here, you'll see all my videos. If you're a visitor of the channel, these two won't be present. Instead, it'll be a subscribe button. It actually should be up here, if I'm not mistaken. It'll have my number of subscribers, the videos I've made. It'll have the subscribe button up there. And then from here, you'll also have links to various other channels of mine. You have Patreon, you have Twitch, you have YouTube, and YouTube again. Whoa, what? That's weird. I host a variety of content. YouTube doesn't like all of my content. So what I do is I prioritize them separately. Creation stuff, or plus, high. Investment, learning, actively doing something to better myself and or someone else is or plus's job. That is entirely what that channel is meant for. The gaming orb is my passion, my number one go-to. If I don't have a video there, something's wrong with me. Either I'm sick or I'm just down in the dumps that day and I just can't do it. Go to the gaming orb, support the cause. I am legit just I record these videos for my enjoyment and your enjoyment, and also to bring in a paycheck. So less of that last one, but yeah, you get the point. Gaming Orb is my go-to channel for uploading content. If you're interested in watching me play video games with some friends and laughing and cutting up and having some fun, go there. The Range Orb has changed. Instead of being at the Range Orb now, it's Orb minus, similar to how this right here says Orb plus, right? It'll say MINUS, Orb minus. Search that up, you'll find Orb minus, right? It'll have Orb with a minus sign, right? Orb minus sign. That hosts all the content YouTube doesn't really like. Just saying. Nothing super not safe for work. It's not safe for work. It is completely safe for work, really, in my opinion. It's meant to be fun. It's meant to be fun content that I'd like to post and have fun with, regardless of the outcome. Go check it out. I actually have fun there. It's pretty cool. No more fun than gaming, but still fun there. Patreon is the universal linkage of every single one of my accounts. If you're curious about what and where I post things, go to Patreon. You'll see a link to Discord in one of the chats. It's available for everybody. It's not current. It has no tier. It has no content posted on it except for some Warhog posts, but we're gonna skip past that for now. Essentially, though, Patreon is where I'm going to be posting a lot of my uncensored content, because I have some friends that I've got some loose interpretations of the word rule, and as a result, all that content has to get posted there. Twitch is my go-to live streaming platform, with the exception of YouTube. If you go to this Twitch account, you will find on that channel description the link to back to YouTube, Orb's Vault, the streaming channel with all the top quality VODs I have. They will all be listed there. If you're interested in watching any live streams, I stream Mondays, Wednesdays, and Fridays. I typically try and start streaming around 2 and around 4 to 6. I try 4.5 hours some days. Other days, I'm not feeling it. Mondays are typically Warframe days. Wednesdays are the just chatting days. I typically try and do a quality live stream every week, because why not? And then Fridays are the random game days. I legit was trying to figure out what to play yesterday for stream, and it got pretty fun in the end. So go check that out if you're interested. All these links can be found on every single channel description. These two in particular can be found on every single channel description. Check both out, and from there, yeah. So hit that subscribe button too. Hit the subscribe button, because we only have 6 on this, and I'm wanting to grow this channel more. I have 57 videos. It's going up. We got 5K views. That's more than I thought we'd ever have, and I'm pretty sure that's typically shorts. That's legit, mostly shorts here. So yeah. From that, you get the point. Let's go on to our final video. We lost $1.4 thousand off of this. This was a combination. This video in particular was a combination of having the lack of sleep finally hit me because I noticed I wasn't getting any sleep. And the fact that when I took the trade, I was so unsure of myself that it was a peer pressure on myself. I peer pressured myself into buying a stock I should not have paid for. I should not have entered this trade. I should not have tried this trade. I should not have. Combining the lack of sleep with the bad mental at the time, biggest mistakes I made that day. Let's get into it. I can't even hear myself. I don't think I'm even talking at the moment. All these videos are posted by me, by the way. There's no like music or anything, so if someone says there's music in it, no. There might be music at the end. No, I upload these videos completely raw. There is no intro, outro, no music. It's just start to finish. Me attempting to take a trade and learning from my mistakes as I go. There you go. Now I'm talking. Two gists. First, I'm acknowledging the fact of sleep. Secondly, I see a red folder and an orange folder. Automatically, price isn't going to go our way. And this is 8:30 and 8:45. Ouch. We should not have traded today on Thursday. This was Thursday, by the way. Similar situation to what we had before. Here we are on the hour. This is for the S&P. We have a fair value gap here that has been respected up to a point. We're looking for price to continue lower for this fair value gap because it has been respected. We are in a downtrend, so down is the number, right? I believe. Let's go back here for a second. This was this is Thursday. This is Tuesday. So price went higher from where we left off. Not Wednesday, but Tuesday, right? Because Wednesday we had a triple red folder day. Not a good day, so we left it. We didn't trade it. We didn't do nothing with it. We stayed out. I was happy because we saved ourselves some money. That's on me. Thursday, on the other hand, we had a little bit of an interesting gist. Because here on the 5 minute, no, not on the 5 minute. Here on the hour, sorry. On the hour it says down, but everything else was in an uptrend. We had our key levels here, we had our low here, we had our most recent high here. This was our general, this is where price is going to go for the day, right? From here, continue onward. This is the daily that we're looking at the moment. Looking for the general trend, which is currently down. Okay. It works until you see this right here. And the gaps occur again. Ooh, we love gaps in our candlesticks because gaps. Ugh. Even without these gaps, I'm confident that we had a fair value gap between these two here. This would have been a gap that said price was going to go down. I would have been correct. This would have been our order block because it was moved down that caused this sweep above onto this high here. Swept this liquidity, which means price was going to go lower. From this move here, we should have known price was going to go lower. We even had a fair value gap on the high time frame saying price was going to go lower. As a result, price, I believe, went lower. This was stupid of me to say and do because this is the daily we're looking at, right? The daily is only meant to be used for bias, not building blocks, not nothing else. I should not have been using building blocks to determine where price was going to go on the daily. That was terrible decision making on my part. That terrible, just awful. I think what I'm gonna do. I know. The next time we take a trade, Monday, when we take a trade, when I finish taking that trade and uploading that video to you guys, I am not going to use the daily, the hourly, the 4-hour, the weekly, the 30-minute, any of that for any kind of building block until the key level is hit. And outside of the hour, we're not using anything higher for building blocks. We're only using them for take profit, general trend bias, and stop loss. That is it. I think that is a very big mistake that I am making. And as a result, I am missing out on trades because of the building blocks I'm setting before taking any part of the key level current time. So we are going to be waiting for the key level to be hit, identify those building blocks, and before taking the trade, we're looking at bias. We're looking at where price is going, generally speaking. And even more so, we'll have that figured out beforehand. So when the key level is hit, it's not like we're identifying building blocks on the hourly to determine where it's going to go on the minute. Though it holds higher power, typically speaking, go with the instinct on the lower time frame. Trade with the trend. Smart. Before market open, price moved lower. We move our key level down. Why? Because we wanted to make sure it didn't cross this key level here. This was on the 5-minute, right? For this 5-minute key level here, we are making sure that this is gold. I think what I'm going to do from here on as well, when I see stuff like this on the hour where it's just nothing but green going up, we have a little bit of red, a little bit of green here, right? On the 5-minute, or no, not even, on the 30-minute, because that's even more of an indication for me. On the 30-minute specifically, we'll identify the highest point and the lowest point, but we're not going to take into account the open of each of the sessions. So this line here, right? Or even this line here. We're not going to take into account those because the action occurs afterwards. the market just opened. It's not going to move much because the other one's closing. So as a result, we're looking at the action in between. Per the 30-minute, we should be seeing a red candle here and a red candle here, a more distinct red candle. We'll see our high point and our low point, and at which point we'll mark the two. And from that, we'll use those as key levels because it gives us a more accurate reading on what price did throughout the day. The hourly, when I see this right here, kind of gets stupidly confusing because I would be taking this right here as a low. That makes no sense because price was all the way down here and then it moved up here, making this the current low because it moved past and now this is invalidated, right? That doesn't make sense to me, having all this green when price is down here and not having a low over here. It don't make sense. So I think that's what I'm going to do from here on. Not counting the opening candle, we're going to look for highs and lows within market and before closing candle. We're not going to count the closing candle either because technically this open candle for London is the close candle for Asia. So we're going to ignore this candle completely and focus on this candle forward, this candle backward, this candle forward, this candle backward. I get that only gives us 3 candles here on the 30-minute. That number doubles. And from that, we'd get a better reading. That's a lot of red lines. That was stupid. So my logic is if the take profit, if the key levels are spaced out far enough, imbalance. If they're grouped together, balanced. Or the depiction of them grouped up versus these down here that are spaced out, that is the imbalance, is the lack of liquidity down here, price wanting to move lower. There's plenty of stuff for it to move lower too, and as a result, we think it's going to go lower. I'm pretty sure our idea winds up being wrong. It goes higher again and stops us out a second time. So within this price action for London, right, on the 5-minute and the hour and everything else, we did not hit either of our key levels, I don't think. I'm looking for... Here we are. This is the daily. This is the hourly here. As you can see, price moved higher, but it didn't hit this key level. And this is before our market open. This was me looking for videos to look at. Or not look at, but listen to, music-wise. So, if I'm not mistaken, on the 1 hour, we had a fair value gap here. This reached up into and cleared the fair value gap. Fair value gaps are signs of continuation from this fair value gap this way. This one here, the larger one on the time frame above it, the 1 hour, right? Per the respected fair value gap, price should have continued lower. That's what we thought was going to happen. I don't know if I entered a sell or a buy position, to be completely honest. If I entered a buy position, that was stupid. How stupid of me to do that. If I entered a sell position and it continued higher, I guess I should have considered this here. An order block, sweep, continue higher. It did continue higher. So I think I did something stupid on this day as well. I took a double trade again. This trade was, I think I actually entered on a buy position because I saw it going higher. I made the mistake in thinking it was going to go lower because of this leg down here, right? This leg down. I wanted to reverse the position. No, I'm wrong because there's no arrows there. But I think it still stands. I'm waiting for a key level to get hit. I preemptively enter. And I think I entered on the wrong gist because I assumed it was going to continue going in one direction instead of thinking to myself, it's going to go the other. Instead of using the confluences it presented me, showing me, telling me that it was going to go lower, I assumed it would go higher off the confluences I found before. So from that, there was my mistake number one. My mistake number two was panicking because as it was continuing the move up, and I knew the trade idea was wrong, after flipping it to the reverse, it proceeded to continue anyway. So I was wrong twice. And as a result, I lost 2 trades. Not 1, but 2 on Thursday. Third mistake I made was thinking I was actually going to be able to recover any of this while forgetting it was Easter. I completely forgot about Good Friday. I completely forgot about Easter. That was my mistake. I should have known better Thursday than to trade, because Easter's one of the big ones that is weird. So, especially with the markets, it's just weird. So, that was my mistake. I need to take into account holidays and know when not to trade. I need to get a whiteboard. I need to get a whiteboard with a small little calendar. Say trade, no trade, trade, no trade. And I'll have like 2. I'll have a green and red marker. T for green, N for red. Just trade, no trade. Day in, day out, holidays, not, whatever. All of it's going to be the same. Because, that is annoying, right? To have to try and remember all that. I'd rather just have it up on the board. Ooh, that's the day? Okay, so no. I think that'd be smart for me to get a whiteboard and have it up on the wall so I could just, oh, thanks for reminding me it's Saturday. Catch you in the next one. There is nothing happening because I am away from the mic. Just a minute. Why am I in on this trade? I think we were right. I'm beginning to remember a little bit now. We entered on a sell position because we saw this clear and knew that because of the balance the way it was going to go lower. We checked all our building blocks since then and actually entered on a sell position. The position was it was supposed to be a short one. We were supposed to go down here, and we did. We technically collected like $1,300. We missed out on $1,300 and lost 1.4K. The exact amount we would have gained had we been smart enough to leave the market. That was mistake number 2, and I believe the first mistake I labeled at the start of this video was my inability to determine when to exit the market effectively. So that way I know that what I have gained from the trade is as valid as it can get. I'm not leaving early, I'm not leaving late, I'm not losing money in either direction. I am exiting when I want to and having the take profit I set given to me through the confluences I've used and through my own ability to determine when to exit. This was prime mistake on this. The second mistake was my over leniency, thinking price was going to continue back down into this node. I thought this was what's going to happen. It didn't. I think we got stopped out on this trade as well. I actually closed this trade myself because I knew it wouldn't go back down, and I had just discovered it was a holiday yesterday. Tomorrow, this video, on the video we're watching. Yesterday, on this video. I'm going to skip ahead to where, yeah, wild difference there. I believe, if I'm not mistaken, I sat on this trade for, I think, 4 or 5 hours. This was by far the longest and most... It was the longest and most unfortunate trade I've taken yet, because I saw the profit and I chose to wait for it to come back down into that range to sell or to exit and be done with the day. My patience lost me money here. My inability to leave the market when I was supposed to lost me money here. This right here is what we did. We could not have called this any better, too. I put this line here thinking, okay, this is a reasonable time. This is reasonable to look at where price is going to go, come back, oh, okay, we'll just leave here, right? How lucky was this? How stupid lucky was this? Because at this point, we thought our trade idea was wrong. We thought it was going to continue higher, and sure enough, I mean, it actually showed it. Sweet. So we entered on a sell here. It went up. We panicked. Flipped the trade to a buy position. We were wrong again. Went and put it back into a sell position. From the sell position, I'm going to press play and let you just see this, because this is actively infuriating to me. I watched it form. You see my face there? You see my face in that corner? I watched that junk form. I watched it happen. Right here on this candle, we had $1,500 in profit. $1,500 from this double mistake here. We had a profit. My stubbornness said this was definitely going to come back down. It did not. Lesson 1 from this video. Pay attention. Period. Lesson 2, figure out how to exit. Figure out the methodology to leave the market. Because right now, the entrance is on point. My chart work is gold, with the exception of a few me still learning things here and there. I need to figure out how to exit the market at an appropriate time. Because I watched that form. It was a skip for you guys. I sat there and watched it. Come and go. I am mad at myself for letting this escape because I had a profit. I had it. And then I lost it. Just as fast. Something I also want to mention. See how lucky we were? We actually put the stick, we put the line, the green line of comeback time, on the one indication that price was going to continue higher. Fair value gap. Actually, an inverse fair value gap because we had fair value gaps going all the way down saying price was going to continue. Yeah, no. This right here occurred. Saying price was going to go higher, and sure enough, it did. How lucky was that? We were lucky enough to put a line here. All we had to do was wait for it to form and leave. $1,300. Not 15. Sorry. So right there, I just said we're going to wait a little bit longer and hope that price continues back down into where that is. When it goes back down onto that level, I'd have left. I'd have left that trade and it would have been a good day. Today. So I'm wrong. That video I posted Friday, that was the orb, the gaming orb. That was me, and I explained it here too. I think I explained it pretty well what I plan on doing with the videos in this one. So I'm just gonna let it reign free, let it do its thing. But yeah, I'm sticking with what I said about the videos. That's not changing. The video I put up Friday is not good, and I have made a better video on the live stream from Friday compared to the one I posted. So go check out Orbs Vault or the Twitch. Go check out the Twitch link, find Orbs Vault from there. You'll see the VOD I put up. It was literally, it uploaded today around like 4 a.m. if I'm not mistaken. So do that. Let's continue on with this. That is going to happen. Yesterday. Did I make a mistake closing that position? This is the exact same chart. This is the hourly. I haven't changed a thing. I have two green lines, one over here. Yeah, we closed on that. There. So we did not make. I'm gonna fix that. We made a mistake here, and then we made a mistake here. What time is this? This is 16:55. 16:55 on 24-hour scale. 12:04. So that's 5 p.m. That's 5 p.m. that closed on. If we had hung on to this trade all the way back down to here, we would have made a profit. It would have been a small profit, but we would have made a profit. We would have. Plain and simple. Had we have stuck with it. My patience is valid. My stubbornness is not. My ability to identify where to exit is flawed and needs to get worked on. My ability to exit after failing a check, after failing once, needs to get worked on. I need to have a 2-step plan on exiting, so that way it's not just a failure if I make one, but a recovery option in the end that I leave with. I regretted it. I can tell my past self that I regretted exiting here, because that would have been a profit. I could have made money off of this, but I didn't. And as a result, it cost me $800 this trade. I can't think of anything else per this video I could really sum up aside from I need to work on my patience and psychology when it comes to trades. I need to work on my ability to identify when market wants to do its thing. I need to work on my ability in identifying the building blocks the entire step of the way. I need to work on my ability not to rely on an app to take a trade on TradingView. I need to work on my ability to work with TradingView in all of its buggy info dumps with the gaps in the candles, the overlapping of different closures, all of it. I need to work on a lot of that. I think this was a very good video and very informative video for myself and you and anyone else who is interested in watching this kind of content. I think I did good this video. And I'm not going to edit it down. I made mistakes and I called myself out on them. That's what this video was for. As a result, I'm going to be a better trader than I have ever been Monday. I'm going to make a profit Monday. Stay tuned. Stay tuned.